we're going to the chapel and we're gonna get married.
Already.
What did y'all do?
Yeah, well, we combined companies, or technically our company was acquired by Aegis and merged together, and it's been good. We had a bunch of unique capabilities where we were doing one side of the physical marketing space. Aegis is an expert in the leader in the financial side, and we never had that. They didn't ever had the physical, and culturally, it just made a lot of sense. And Bryan and team, when they want something, they go after it pretty aggressively, and reached out to us and took a little bit of a convincing because we really weren't for sale and didn't, had heard of Aegis, but wasn't in the mindset of this is somebody that we could do a combination with. And I think after a couple months of just going back and forth, getting the teams together, that was a big thing. Like Bryan brought all the executive team to Oklahoma City, sat down, and after that meeting, my business partner, it had been 10 years. We kind of looked at each other and we're like, man, this seems like it could be a really good thing. So ended up doing the deal, closed January 1. So,
and I'm fascinated about this because, as a private equity guy, ultimately I always put money into real assets. So not that I want to minimize the human portion of it, but, I owned an oil and gas well. I owned reserves in there. Right. They may have been a water well because the well sucked, but whatever.
Yeah. Right.
Walk me through this, how you merge a people business, because that's kind of fascinating to me because, you acquired them. The assets walk out the door every day, don't they?
Yeah. I have to go back when Max said technically they were acquired. We've got a big laugh out of that because I always say it's pretty easy to tell who got acquired because who got a check and who wrote a check. And as I recall, I wrote one and don't remember receiving one, but we've gotten back, more than what we could ever invested. To your question, there are some real assets, and at least that's how we viewed it when we acquired Ancova. Certainly, the people were a huge component of it. We really looked at it, and we had been looking at the physical space for quite some time because we knew it was a place where all of our customers are obviously participating in the markets every day, and we thought we might be able to do something a little different. The challenge for us was we knew the kinds of companies that were involved in the physical management of oil and gas molecules.
Hey, Bryan, you might want to slightly. Well, why don't you hop up and just look at real quick? I think it's okay. Turn towards us, just not as far torn edgy.
Yeah, I don't know.
Because that's your camera. And there's the weirdest dynamic that happens. I don't know if you know this, but I'm always like, well, why isn't that camera up here facing this? And what happens is if you don't have cameras centralized in one spot, when the viewer watches it and it shifts angles, people get dizzy. It's actually really a thing. So you have to have cameras grounded on one side. So.
Okay.
All right.
Do I start that question over again?
So we can, okay. This is fascinating to me because in effect, you acquired people and, I'm used to buying assets. So I invest in an oil and gas company. And if you have to run management off, you run management off. But it sounds like you acquired a bunch of people and they walk out the door every day. So how are you thinking through that? And then tell me that, and then we're going to circle back to figure out what y'all actually do.
Yeah, sure. I actually feel like we did acquire a tremendous amount of assets. I think it's easy to view it as a people business, but as we looked at the physical space, and we'd been looking at it for quite some time, the large majority of our customers are involved in the physical movement of molecules. And so, we had a thesis that we wanted to be in the market in a way where we could do it at scale with an experienced team. Ancova had that. The average person there had almost 30 years of experience at Ancova. Max may have been the least experienced, as it turned out. We were looking for someone who had an edge from a technology perspective. We can probably talk a lot about that. Ancova had what we would view as a version 1 of technology that was really fascinating. We had not seen it applied that way anywhere else. And then we wanted to do it in an unconflicted manner. We do not want to own we do not want to purchase, molecules and trade on the backs of our customers. That was something that was really important to us. And so we found all of that with Ancova. And so the assets that we got, which you're right, they can walk out the door, but that was an important part from a people perspective to make sure that they were aligned with the vision. Max mentioned we took the team to Oklahoma City. That's one of the most unique things I think I've seen done in a transaction before. We tied most of them, through some form of equity to the long-term success of the company. And I think just generally our cultures matched really well. So that part has been great. And Max should comment more on it, but our cultures and Max and Mark were very focused on that, as are we at Aegis, to make sure those matched. And the technology was a huge asset. I think we've done a lot of development on top of that to really modernize it and scale it. But that was a tremendous asset. So, I think we were fascinated by the people and the technology assets, and I think we're taking very good care of both.
Well, congratulations, because at this point you have made it longer than CS and DLJ did, or First Boston and DLJ. It was really funny. I had a buddy who liked to joke that he was the last DLJ guy at Credit Suisse, and he said, well, they can't fire me because then they made the whole acquisition for nothing. And one of our buddies like, oh yeah, they can get rid of you and just forget it ever happened. But so now tell me, what are we calling the combined company now, and what does it actually do today? And then tell me who was doing what.
Yeah, well, still Aegis Hedging, but there's Aegis Physical is the new group that is our old company, basically, still based out of Oklahoma City. And really, it's everything that has to do with selling the product or monetizing the product. So everything from negotiating, doing due diligence on the front end for producers to help them look at an asset and understand the midstream side, understand the takeaway, understand the gathering agreements, processing agreements, and then the marketing arrangements and what price they're getting and things like that. We do that on the front end. Then once someone has an asset, we help them manage that. So it's the day-to-day selling the volumes, whether that's nominations, scheduling, calling the oil purchasers, getting them to come pick up the barrels, renegotiating those deals, all the back office side of it, contract administration, helping with just kind of the day-to-day stuff, well connects, like if there's a well connect coming up, who's bird dogging that, who's making sure that the pipeline's going to be there on time. And so it's really kind of A to Z physical marketing and some clients. And then we've got the technology on top of all that. And so some people, it's kind of like full service. We do everything. It's like they don't have somebody that does what we do. So they'll bring us in and it's basically, we want you to be our marketing or physical department. Other folks, they have that already. And so they just really like the tech and they're like, we have a team of people, but this can help supplement what we do and make it better. And so I think that there's something we can do for everybody. And the nice thing about physical is that it's 24/7, 365. You always got to sell a product. Versus on the financial hedging side, sometimes it's really needed. Other times it might not be needed as much. And I feel like with the combined company, now Aegis can help you sort of full revenue all the way from A to Z, sell the product, do the risk management, and then put it all on an incredible technology platform where you can really give you insights that nobody else has.
Yeah, that's right. So before the transaction, Aegis is a standalone entity prior to Ancova. We have people who are deep in the markets. Primarily oil and gas, that has been our primary focus, but it goes beyond that into metals and ags and other markets. So we had deep expertise in the markets. We were able to advise on hedging transactions, establish strategies, policies, et cetera. We take those to market through a marketplace known as Aegis Markets. So Max mentioned Aegis Physical as a new division. Aegis Markets was a division. Aegis CTA, Commodity Trading Advisors, who provides the advice. These are all mostly regulated entities under the CFTC. And so we could provide the research, we could advise on hedge strategy, we could execute the transactions through a marketplace, we could manage those hedges through to settlement. It's kind of a simple way to think about it. And all of that was enabled through technology. By combining the physical component, now we had good insights into what's happening into the physical markets and actually get that product sold for folks. And that connection between physical and financial is, as you know, being in the industry, is really important. What indexes you're paid for in the field need to be hedged properly, for instance, and how you think about your ethane elections are really important versus how you're hedged, for instance. And there's some unique things you can do there. So, and we could provide 15 other things, but this really did round out and create a full service offering from actually we're seeing diligence in a number of new deals, from looking at the actual physical asset to, setting up transportation, to putting hedges in place pre-close, to managing those hedges to settlement, and constantly readjusting the portfolio. So that ability to see the complete life cycle of a molecule, through that puts us in a really unique position today.
Plus, just the research side, such a luxury. Like the Aegis team has 6 or 7 full-time people that are just macro research. And just to be able to call those guys up and be like, hey, what do you think about this basin? What are your thoughts on this takeaway here, this basis differential? We sit and have 2 meetings a week, one on Monday morning and then one on Friday afternoon, where we just sit around and talk about the market, why it's doing what it's doing. And that's the kind of stuff I love to nerd out on. So that's just been really fun to just have a team of guys. That's what they're focused on all the time, is just like what's going on the research side. And I think it's a huge luxury for our clients as well to just have access to that.
So looking at the businesses separately and then coming together, how much overlap was there in geographic focus, and then how much customer overlap was it?
I don't know how much customer overlap total. There was some. I mean, maybe
handful
of our clients were Aegis clients. But the nice thing is that the target clients for both are the same. So Aegis has hundreds of E&P companies. And we had, 50 something, right? And so it's been a great way for us to go and get a bunch of warm leads and talk to the existing Aegis client base and say, we've got these new capabilities. Do you guys need help? And that's proven out. I mean, I think I don't know how many of the new things we've signed on that have been existing Aegis clients, but it's just so nice because they've got great relationships. They can introduce our team, go in and find if there's a way to work together, whether that's the technology or whether it's advisory or the physical marketing, the molecules. So just that part of the thesis has been really nice. I mean, our BD guys are like, man, this is great. Like they're just getting it teed up, and then they just go right in and can knock them down and help people out and add value. And it's easy when you have the infrastructure and the relationships that the Aegis team had before the combination.
Yeah, I mean, just to put some numbers, a little over 500 customers at Aegis, 50 customers there. It was only 5 that were overlapped. We're both covering every major basin in the U.S. And 4 months in, it's so nice to see that we've taken financial only customers and upsold every part of physical, right, to create the complete offering. And even though a much smaller number of customers from Ancova, including I think one that's going to sign today, we've seen multiple upsells that were physical only adding financial hedging. So, we really have seen success coming from across both organizations. It's been, it's early days still, but it's hard to imagine being in a better spot post an acquisition.
So one last kind of business question, then let's geek out like it's Monday morning or Friday afternoon, because I have thoughts there that I want to pick y'all's brain about. Y'all thought y'all were doing a podcast. I'm like, I get 2 of the smartest dudes in here to ask my questions of, who do you want a phone call from an E&P company? Is there like a minimum size, maximum size? What?
It just depends. I mean, I think that with the physical stuff, we can help anybody. I think with financial, there's a lot of folks you can help. Depends on what their hedging, or you can probably talk better this than I can, but what their hedging requirements are. Some folks just don't hedge, right? And if you're somebody that doesn't hedge, then you probably don't need hedging or financial advice, but everybody sells product. And so we've had in the past clients that were small, like little non-operator clients that they wanted to take in kind on their volumes and have us market them because they weren't happy with the operator. And we'll go work for those folks. We've got big, large public E&Ps that are now using our software and rolling it out across all their assets. So I think it's kind of anybody anywhere in between. Historically, it was a lot of private equity backed guys, smaller to mid-size. I think through the technology, that's really opened up the total addressable market to the bigger groups with more complicated operations because they just have so much to wrap their hands around. I don't know, Bryan, if you want to tack onto that question, but.
I think you said it well. There's really no client that's too small to have a conversation. Practically speaking, when you're hedging, it may be hard to get credit if you're, 50 barrels a day.
Right.
But really, when we map the market, we see 1,400, total customers we could work with. In oil and gas, we're working with 400 of those now. Another 100 outside of oil and gas. So there's a long list of folks that we can help. And we certainly have been engaged by a number of customers of late that don't have an asset yet. but are looking for help on how should I think about, the transportation issues in a given area? What should I think about from a hedging perspective? What is, we've got PDP, et cetera. So, we literally have customers who have no production right this second.
And your pitch job on the financial side is being more thoughtful about future prices as well as better execution on trades. What else? How else would you, if you're pitching me, what am I hearing?
Well, on the hedging side in particular, we don't want to, we have a hard time calling the market. Just anybody can tell you they know what the price is going to be. I think we have some unique insights into why we think, you may be bullish or bearish the curve going forward. So I do think we're well informed to have those discussions. But from a hedging perspective, it's really about what does it take to make your plan work. I think a couple of years when we were here, and by the way, crude is at 120, and I think gas was 850. It's a little different time, and we were saying to hedge everything you possibly could. But we have a way to model your exposures, right? And so we start to think about someone's plan. What have you underwritten an asset to? What have you committed to shareholders? What do you want to pay out on dividends? I mean, you name it. Let's work to a plan, and now the hedges should enable that plan. Of course, we'll have a point of view on the market and whether or not today is a good day to do it or not, or this month is a good time. But, hedging should not be about calling the market. It's about making sure that you are executing against your plan. Now, when we take those hedges to the market, to the dealers, primarily, large banks and, other swap dealers, that's a very important time. Because pennies matter on execution, especially at the volumes that we're doing. We have about 7 million barrels a day, BOE a day under management. So taking those deals to a dealer and making sure we're creating the right competitive tension and getting a fair price is something we think we're uniquely positioned to do, both because of our technology and because of our insight across so many customers that we're executing hedges on. So, and then taking that all the way to settlement. How's that valued each month? Are you being paid properly by your banks? Are they requesting the right amount of money to you? Are you set up for your audits, et cetera? So we really want to take that hedge from front to back. That's the value of hedging. Physical has a lot of the same characteristics, an equally opaque market from our perspective.
Yeah, I would say with physical, the model that we had at the beginning of the company was started out as advising. And it was pretty simple, just consulting, advising. You don't have our expertise on staff. And so we would come in and be that for you, sort of an outsourced model. In 2016, 2 years after we were founded, we got into the actual physical purchase function and acting as agent, bidding out products. And what we saw there was a lot of what I would just say kind of misalignment. It's like, I make the joke all the time, like you would never use like a mineral buyer as your like title attorney because you'd be giving them all the secret sauce, but yet you're using what I would call a market maker to do your marketing and your advisory. And it's like, well, you're giving them your drill schedule, when you're going to drill it. They're telling you which pipelines you should go to. And by the way, on the back end, their traders are taking out transport, arbitraging your volumes. Now, they're risk takers, and we need that because like you want people to take risk. They're market makers. They're completely necessary and fundamental. But we just always felt like it was a little bit misaligned. It's like, if I'm trading my own book, you're giving me basically a gold mine by telling me all your plans. I can go out and make like a not risk-free arb, but like I can arb that. And so that was always a traditional model. A lot of these marketing shops came from kind of that Enron era. If you look back, a lot of them were started up around early 2000s, mid 2000s. A lot of them come from the trading and financial side. And we came from the E&P side, like working for Chesapeake, my partner and I. So from the second largest gas producer, most active driller. And I think that we always just took the side of the E&Ps. And it's like everything we've ever done is just like a fixed fee, like a pass through. Like we'll go out and bid it out, find the best market makers, lay it out like a menu, and then we can sell it to them and just charge like a per unit cost or per unit fee, and then do all the back office scheduling, accounting, invoicing, all those things for you. So it was really more of just like this, extreme transparency. You know exactly what we get paid. We don't trade our own book. We're not taking a bunch of credit risk. We're not, trying to buy low, sell high, basically. And I think that resonated with a lot of folks because they were just like, I feel like you're on our team. It's aligned versus this black box that you're just selling into. And I think Aegis has been historically on the hedging side in a very similar mindset of this transparency. Like we provide a service. We're not out, playing the arbitrage game. So.
Yeah. No, it sometimes felt like sitting there with our E&P companies. We're getting screwed somewhere. I can't tell though.
Right. Yeah.
That was, we felt that.
Well, and from the midstream companies too. I mean, it's like Mark and I, my partner, would always joke that we're kind of the BS meter. It's like if you're a land guy or something, or pick somebody that's smart at their discipline, but they go sit down with a midstream company, those guys are going to like, that conversation is going to be different than if we were sitting in the room with you, because they know that, like, number one, we know all those guys and we've worked with them for years. And number two, they just know we know what we're doing. And it's like, I think it's a totally different conversation. We believe you'll get a better deal just because we're like involved with it. It's like they're not going to try to pull the same crap that they would normally pull. And they're just doing their job. I mean, midstream companies are trying to extract as much value as they can. And our goal is just to get a fair deal. We want both sides to win. And we play referee a lot in the middle there, but that's
and
another
I'd be
piece
like
of it.
happy to pay you not to have to deal with a midstream.
Yeah,
company.
some guys are.
Those guys fight over pennies and they
Right.
fight all day, and it's just painful.
Well,
Can be.
it was fascinating getting close to this space to see that there's a very acute need where, people are receiving hundreds, if not thousands in some cases, of statements every month from the midstream companies, all in different formats with different levels of detail, and trying to extract the key data elements to make better decisions about whether how they market it or how they get information to the reservoir engineers to update their models. I mean, there's 100 different business decisions that can be made and no way to get at the data that sits inside of there. And that's what really got us attracted to Ancova to begin with, was that they were starting to solve that problem. And so, you see that people really struggle to understand how they are actually paid. I mean, that is a fascinating thing to me. I mean, your sales are the lifeblood of an oil and gas company, but too little attention. I'm not going to say none. Too little attention is paid to: are you being paid accurately? Are you being paid fairly? Are you being paid in line with your contract? Are there different decisions you could be making? And so allowing people to get at that data and drive better decision making, that is a fascinating problem for us to get after for customers who just don't have the time to dive into that.
Yeah, and that's what the tech that we were he's alluding to the tech that we were building. A lot of it was revolving around that, like capturing all this data, figuring out how to make better decisions, figuring out if you're getting paid right. I mean, we would find payment mistakes all over the place, and it's not like this malicious thing where they're trying to pay you wrong. It's just they've got a bunch of junior accountants entering stuff in. You've got two commercial guys that negotiate some complicated deal, and then you pass it off to some accountant who's then trying to get it into some rigid accounting system that has a hard time even getting all the data in. And so something like, we just caught a deal this morning. I got an email. Fuels were supposed to be capped and they were getting paid as actual, and the actuals were above the cap. Well, it's a huge delivery point. I mean, it's a 100 million a day plus delivery point, and the fuels are 2-3% off. Like, do the math. You only get 2 years to go back and ask for an audit. So it's real dollars. And so figuring out a way to like capture all that data, display it in a way to where these metrics that people want to get access to, like, what are my NGL cuts? What do the yields look like? What's going on? Ethane prices dumped. Should I switch to rejection? Like, back in the day, it's just, you have to go through spreadsheets, and there'd be a bunch of analysts that would spend 2-3 weeks digging through a bunch of state PDFs, hand keying stuff in. Whereas now, like, we're using some machine learning and AI to just be able to pull all this data into a database and slice and dice it in a million ways and really show you like how you're making money.
And just to put a really fine point on that, we were on a call with one of our customers. We were demoing this technology for them. We uploaded all of their POP statements or settlement statements. This is a pretty large public company, E&P, and we had never seen the data before we loaded it. Took 2 minutes to load down 3,200 statements, read them, organize the data, popped it up on screen. And he said, wait a second, is that an NGL trending report? I said, yeah, I mean, it's kind of right out of the box. And he said, I just spent the last 4 days pulling that together for our management team. I mean, we literally took something out of the box in less than 2 minutes, had something up that had taken 4 days for several individuals to pull together. So that's the kind of power. I mean, people talk about, AI, and this happens to be machine learning, inside of an AI, toolkit, but those are the kinds of efficiencies that can be done if you're, or achieved if you can, if you're willing to invest and do things at scale.
I would have bet my entire life, and I'm trying to think when this was, but it might have been 15 or 20 years ago, we met with a company that was basically going to be the trusted third-party meter. Because now everybody's got, you got 12 meters at every station of this, that, and they were just going to be, no, we're third-party, we're trusted. You run it through one meter. That's the number everybody uses.
Yeah.
And all that. Nowhere near that yet.
Yeah. It's tough. I mean, the metering side is another piece of it. We're not doing like physical audits on meters. We certainly have the engineering connections and the connections in that space where we could help provide that service. But ours is really more like, there's a lot of software around what the wells are flowing, like production software. And that's like a pretty common thing. And you've got the SCADA and there's been a bunch of tech there, but we're more focused on like, what did you actually get paid? And so what actually got sold? Yeah, just because the barrels are in the tank, that's one thing. Or just because you flowed this much gas, that's, you have an internal gas analysis. You think your NGLs are going to be this. Well, what were your actual NGLs? And so we're very focused on cash coming in. Like, what was the actual cash you got paid? Let's look at those statements. Let's dive in. How does that compare to your contract? Does it look right? And it's complicated. Those contracts are 50, 60 pages long, and there's a lot of terms, different recoveries, different fuels, different fees, treating costs, processing, downstream transportation, NGL fractionation, transportation fees. I mean, there's just, each statement has 40 different data elements on it, and they come in PDF most of the time. And so you're getting hundreds of these, and it's just like, that's a big piece of it. And that's where I think the tech, anybody could use it. Whereas like the advisory, if you already have a whole team of marketing people, you probably don't need us for advisory. Maybe we could help in some instances. But that's why I think it's so cool with like the Aegis platform, what they've done, because now we're integrating it all into one spot. So you can see like your financial hedges, you can see all the market research, you can see your actual sales all in one cloud-based, just log in, have all your stuff there. It's pretty cool.
All right, let's geek out like it's Monday morning or Friday afternoon. I'll go first. The follow-up question is going to be, okay, well, tell me what y'all talked about this Monday or last Friday or whatever. But my thing is, I think that every natural gas producer in America needs to stop thinking about selling natural gas and start thinking about selling electrons in some way, shape. And the reason I'm thinking that is because, one, E&P guys are the most entrepreneurial people on the planet. The men and women of the oil and gas business are very entrepreneurial, and it feels like we've stopped innovating. So that's kind of number one. Number two, people need electrons. They don't need natural gas these days. I mean, the price tells us that. We're gonna triple the amount of electricity. I mean, when your brother runs off with your girlfriend, you want AI kicking on Hank Williams Jr. on your phone, right? You don't want to have to go Google search it. And the amount of electricity that AI takes versus just a simple Google search, it's like 5 and 10x.
Yeah.
So we're going to need tons more electrons. Silicon Valley knows that, and they're going to go steal our business if we don't provide them electrons.
Yeah.
So I have this soapbox. Am I right, wrong, indifferent? Are y'all thinking about that, or am I an idiot? What do you think?
Max will have a much more informed opinion on that. But to illustrate your point, this was told to me by one of our dealers in New York, their head of crude trading. And I haven't verified this statistic, but it fascinated me. He said one new NVIDIA AI chip, and I've forgotten what they're called, will consume as much power as a Tesla driven 13,000 miles in a year.
Yeah.
That is a fascinating, way to think about what the electricity needs are over time. And, we've banned the word energy transition at our company. It's silly. It's energy addition. And by gosh, we should change that frame, to be, we're in conservation mode, and crude oil is going nowhere, right? I haven't figured out how to make medical supplies out of wind or water or solar as best I can tell. I mean, it's one thing on fuels and cars, and there'll be some transition on that, but we ought to be thinking about conservation of that. Like, there's not an unlimited supply. And so I think we need to change this whole framework of all of these commodities to be thinking about, hey, we're going to need these for a lot longer than we think. And so we need the additional energy capacity, through renewables and other means, so that we have that for longer. because we're going to be so reliant on it would be my take. But you're right.
You know what I say on BDE all the time is we're adding 2 billion people to the planet. And I don't know if that's in the next 5 years, 10 years, but whenever. Right. And they're all coming from Africa and Southeast Asia. And if our answer to them is, here, use this solar panel, and by the way, you don't get cheap coal to build an economy, build a standard of living like I've got, i.e. let them eat cake, that's going to have real global repercussions.
There's no doubt.
Like that's like war type shit, I think. And so that really worries me that we're not thinking that one through.
And look, I'm a very strong supporter of all the renewable complex. And we have a number of customers that are involved in production of biodiesel and renewable diesel and solar panel production. I mean, that is a big part of our business also. And so we're incredibly supportive of that, but it's not going to be a replacement, right? There will be portions that are replaced, but we've got to be thinking about this as we've got, where you started the question, we have massive power demand. Like, how are we going to think about that supply in aggregate? Because everything I see and read and watch my kids do, there's going to be, more need for electricity than less.
Yeah, we talked about the other day, and it was someone brought up that the consensus view among a bunch of research shops was that nat gas power generation had peaked and that it was going to fall off, right? And the chart was hilarious from I think it was S&P, and it was like, it looked like a Mount Everest. It was just straight up, natural gas power demand, and then it was just like straight down starting in 2024. And no doubt renewables will soak up some of the power needs that are coming with AI specifically. And we've seen some people throw out, Raymond James, I think, had a thing that said 10 BCF. Another group said 5 BCF a day. This is by 2030. They're saying, I think Matt and the internal guys maybe think it's closer to 4 after talking to a couple of these shops. 4 BCF. That's huge. Those are huge numbers. And the real question is like, okay, well, how much of that will renewables take versus natural gas? And so what was the recent power plant that just kind of defied orders recently, and they're going to start up a new nat gas generation, and they're getting slammed by it politically? Have you seen that story?
Yeah.
Or I forgot where it was at. But yeah, they basically said, look, we have to build this. We got to build this natural gas generation power plant. A bunch of people were upset about it, and they just kind of said, we're going to do it anyways. So I think nat gas will be the key fuel for AI. AI is not as easy of a swing demand as like a Bitcoin mining where you can just turn it off and turn it right back on, at least as far as I know. Like, they want it running. And then I've also heard a lot of these Bitcoin guys are converting to AI. Like, I think maybe it was Core Scientific said they're going to convert up to 50% of their computation power over to AI. So it's shifting that way. I think nat gas is going to play a big role just because it's so reliable. We have so much of it. It's damn near a waste product in a lot of areas where it's negative.
My only soapbox on that, and this is totally anecdotal from an unemployed dude in Houston, Texas, but if we leave Silicon Valley to their own devices to do that, they're going to choose nuclear. And we all know nuclear's a ways off and it's hard, but technology's always happy to throw money at things, make it better. And they've got way more pull with the government to be able to do things like regulatory and all. And I just worry that we're not being proactive enough as natural gas producers in terms of handing the electron solution.
Silicon Valley should be talking to Aegis, because with what we have on the environmental side, we could do a gas supply deal. We can figure out where they can get good gas supply. The physical team could work with them. If they've got a data center location, help them do the supply side, or do the supply for the electricity. And then Aegis has all the environmental group that could get them credits and do things to make them net zero if they want to be net zero with the natural gas. There's even folks out now that have this, certified natural gas or whatever, where they're making sure there's not as many leaks. So get it as clean as you possibly can, and then do offsets and things like that if they want to go that route and pay for that. But I feel like we'd be uniquely positioned to help.
Because I'm actually, and this is said as someone who's not an engineer and incredibly ignorant on that front, but I'm actually this weekend going to record a podcast with the head of data centers for Intel.
Okay.
Because he actually called up and said, I listen to your podcast. We're trying to figure out energy. We want to have our ducks in a row. So I'm ready to redo the podcast with y'all too when y'all buy Aegis electric generation.
Well, I'm curious. When you say that the nat gas producer should deliver electrons, what do you have in mind?
See, I'm a big picture guy. I've been actually trying to think it through. Is it literally figuring out what a data center needs in terms of power usage, sizing up the nat gas generation, and in effect selling that to technology companies? Is it, Bitcoin mining's actually an electron, right? If you think about it, should every nat gas person, because this was going to kind of be my second question is, I produce natural gas. I run it through the processing plant. I make the decision to strip out ethane or not, or whatever. Are we going to see a point where midstream companies are going to say, do you want to mine Bitcoin instead of selling the natural gas down the line?
Or just convert it to electricity in general.
Or we'll throw it into the grid something.
I think there's a lot of big electricity needs in the Permian. I mean, I've talked to a number of large Permian producers that are like, me and a couple of our peers around us could backstop a power plant. They're having so many issues dealing with utility companies, how slow they are, not commercial. So maybe that's where it starts, is in the field.
The head of data centers, I'm going to get them to Monahans. I'm going to take them to the Bennigans and sell them on, this is where you want your data center. Because we got natural gas everywhere.
It's not a coincidence that Zuckerberg put John Arnold on the board. Right. I mean, like, why would he put an energy guy on the board? Because he knows it's coming. I mean, he knows that this is what they need to be focused on. And he was making a comment that, they're going to need just for one facility, like a gigawatt. And he's like, it's not going to be the chips that are the bottleneck. It's going to be the energy. So it's the two worlds are coming together. Similar to how the Bitcoin stuff did a few years ago. I think AI is coming just as fast as that wave.
And so I don't have a good answer for your question other than I'm just asking it, because it seems to me we could be at $1.50 or $2 gas as long as we wanted to be. I mean,
Well, and we'll see. I mean, like, the future curve shows it going higher, but so many people are curtailed right now. I mean, we're hearing stories, the stuff that gets press released, like the big companies like Chesapeake and others that are drilling, completing, and shutting in, waiting for 2025 to bring it all online. But we hear stories of even smaller producers that drilled a big 20 million a day dry gas well, and they're like, we're shutting it in and we're going to hedge out in the future and then produce it when it comes online later. So will the curve materialize the way that it's showing that it will? Probably not. I mean, I think prices, we'll see. I mean, I don't want to get off the company line, what we've discussed, but I think there are scenarios where prices stay depressed just because there's just so much gas.
Well, and if, it's interesting. I was talking to Rory. Do you know Rory Johnston?
Yeah.
Yeah. And so I had Rory on the podcast when we were talking, and Rory said, this is an interesting point. Don't know what to make of it, but everyone talks, returning to October of 2019, pre-COVID, we're slightly higher on flights or whatever. Rory's like, I'm not sure we should be talking and thinking like that, because did the pandemic fundamentally change something? Meaning, is it reverting back to pre-pandemic's the right way to think about it? Or are we all going to travel more because we lived through a pandemic now? Are we have we changed workflows enough that, and so his whole thing is figuring out what normal is may take us kind of a few years. And so,
it's going to take time. I mean, even just like the driving patterns for me personally, I work from home at least 1 day a week, 2 days, sometimes a week. And so prior to COVID, I never worked from the house. I was in 5 days a week. So think about that ripple effect across a lot of people. That's, I've noticed the difference in my mileage on my truck. And so think about how many other people are in that boat. So there is a change there. I think what's shocking is the AI. Did you guys watch the OpenAI demo from yesterday at all?
No.
It's pretty incredible. Like, they're showing some stuff where it's like, AI doing tutoring. Like, a kid was sitting down with a geometry problem and it's just talking to him like a real person, not robotic, sound like a real voice, helping him do the product. There was another one where they sat two AIs next to each other and it was like a customer service call. Like, hey, like, where's my package? I can't find it. The other one's like, I'll look that up for you real quick. And they're just like talking back and forth. So
I saw the translation one.
Yeah, the translation one.
Talking and translating.
Just talks in Italian or whatever. Yeah. But like, those types of things will probably change the workforce, will change Maybe energy from the demand side could change energy from the travel side. But even what we're doing with AI, I mean, I think it could potentially replace, maybe not replace is the right word, but change the roles of a lot of accounting and back office folks just with what we're doing. I mean, maybe it frees them up to do something else. But like with the stuff that we can do now in seconds, to Bryan's point, they used to take us weeks of time. That's a big deal for companies, right? It's like if I can take all this data for you and within seconds have it in a usable format and then API it directly to your accounting software, it's like that's a whole department of people that used to have to do that. So that doesn't mean those people go away, but like they maybe just change to a higher value use case. Like they go work on something else.
It's definitely something they need to be playing with today. Because if you're not playing with it today, you're going to be left behind.
For sure.
I do want to go back though, Chuck.
All right.
I heard it here first that Silicon Valley in California is going to get nuclear.
No,
that's a fascinating call.
Anecdotally, what I have heard, and we'll see what this fellow from Intel says on the podcast, is they think they're doing micronuclear, that's going to power all the data centers.
Modular,
they're not, SMR, right?
Small modular reactors.
And I don't know as much about nuclear as I should, but at the end of the day, they're going to do it that way. They're going to avoid grids, because I think everybody, oil and gas, even the big utilities, have to admit they're incapable of building a grid that sustains all this. You know, we're going to have to go off the grid. But I think like when you hear Mark Andreessen talk and stuff, they're all leaning towards nuclear. So
it could happen. It makes a lot of sense. It's just can we get out of our own way?
Yeah.
I mean, even like the energy transition stuff, it's like we can't mine things here in the US, right? And now they just announced that they're putting on more tariffs on China for EV batteries and solar panels and all these things. And it's like, well, we can't make them here, guys, because you won't let us mine. And so, I mean, the whole like NIMBY, not my backyard, not letting us do things here. We have a lot of resources here. We could do a bunch. We could do nuclear. We could do almost unlimited amounts of natural gas. We're so resource rich. It's just going to be the regulatory world. Like, how does that get navigated?
Yeah, no, it totally does. This was pretty interesting. So on the BDE podcast, my girlfriend's British. And so anytime I would say Europe or the Europeans, she'd let me have it. We are 27 different countries, blah, blah. We're not a uniblock. So we actually went through last year, and every episode we were breaking down the different countries and just what their nuclear sources were, uses, energy sources, uses, and what their issues were. And one of the things I found fascinating, Europe was able to push ahead of us with renewables because, in effect, France is a big, huge battery with all its nuclear stuff. It's base load. At times, they're exporting 35% of the electricity they're generating. And, the French did that basically in the 70s, right? In terms of just, we're going to choose one design, boom, 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 we're going to lay this out. And their electric costs are at least average of what Europe is, and sometimes even lower. It really is, if you choose one design, replicate it over, and I'm not for that, I'm a free market guy, but if, let's say, Google or whoever has their way, one design, regulatory approval, we're just going to build it over and over again. You can see that happening much quicker than we would think when we think nuclear.
Well, nuclear is the miracle fuel. I mean, if it were discovered today, everybody that's been arguing for all the grain,
we solved it.
we solved it. And that's what's so fascinating, right? That's where I think we're going to have a hard time getting out of our own way. And I think the call in California that's particularly interesting. If Google wanted to set up a bunch of independent, nuclear facilities, I could see that happening in Texas, where we're a bit more free market. But that's an interesting call. I like that. I think nuclear is a is a great option. We got to get people wizened up on the things that failed that were built in the 70s. Got it. There have been some. Have you ever driven a car from the 70s? We have made improvements in our manufacturing and
we couldn't do anything
capabilities.
In the 70s. We sucked all over. Yeah,
it seems a lot like the space race. It's like we had advanced technology back then that we don't even have now, and we're sending guys to the moon. And then what Elon's doing with SpaceX, he's now, I saw some budget numbers, like, he's doing things for a fraction of the cost of NASA. He's, made it into a profitable business, I think. I don't know if it's quite profitable, but it's getting there. And so it's like, is it the private sector that steps in to do this stuff as a free markets guy? Like, I would hope that you would see that, but it's going to have a hard time beating natural gas because we have so much of it. It's so cheap. Methane leaks are fixable. That's the big thing everybody says. Oh, methane leaks, like it's fixable. Where was methane leaks in the IRA bill? Like where, they targeted getting more solar, more batteries, a lot of money to China in that thing. But I think I backed into it, and I don't know if my numbers are exactly right, but had they taken the amount they did in the IRA and put it towards nuclear, probably could have turned 10 to 15% of the total US to nuclear if they just spent that money on nuclear, or if they gave incentives to stop methane leaks. Like, hey, for every methane leak you stop, we give you an incentive credit. You get paid more for your gas or whatever. But so there's solutions that can be done, but the regulatory side is going to be a challenge. And I think because natural gas, there's so many state incentives, because there's a lot of states that produce a lot of it and means something to them. Some of these projects, I would guess, would gravitate towards those areas that are more business friendly. I feel like nat gas is going to rise up, at least in the near term, to meet some of this demand.
And I hope so.
Yeah.
I'm just worried that we're not. So, all right, Bryan, last question, because y'all have better things to do than educate me on things, and y'all have been kind with your time. Give me something that y'all talked about at a Monday morning meeting or a Friday afternoon meeting when y'all are sitting around spitballing, talking about something big, macro. Give me something cool y'all talked about.
Well, I think the easy ones, and Max should go into more detail on any of them. I think, does LNG come on as fast as we hope? Right. I mean, I think that is a very important factor for the future price of nat gas. I worry about that. I worry about where we are from a pricing perspective. We've seen some recovery here, but we have to incent the continued production of natural gas, and LNG coming on is going to be an important piece. And will that go slower or faster, or at some reduced pace or faster pace? The good news is, and this is where we've been debating a lot, many of the projects have been delivered early. And we talk a lot about the delays, so that's an important factor, I think, in what happens with gas here in the I'll call medium term. I think crude oil, how much war premium is there? We said it was $10, and that's proven to be about right since things have calmed down a little bit in the Gaza Strip. But this geopolitical risk kind of to us moves things. China demand is obviously a big part of it as well. But the thing I think is a little easier to understand is just this, this geopolitical risk is obviously real right now. And how much is that going to move markets? We talk a lot about OPEC and what decisions may be made and those sorts of things. But I find the war premium and what does that mean? And if we see a series of ceasefires, what could that do to crude oil price? And we've been talking to customers about that for months now, and we're starting to see some of the effects there.
That, I mean, those are two that we talk about all the time. I mean, I'm always fascinated with natural gas. Like, is there ever a pathway to a more sustained $3-4 price, like for a longer period of time? It's just hard with how much we have. But to Bryan's point on the LNG, when that comes on, all the new AI, does that materialize into demand? But can we get to a healthier gas market where it's not, I don't think $5-6 is, we'll just drill it to oblivion. But like if we could get to $3 sustained, $3.50 sustained, and have a tighter band with less volatility, probably needs to be potentially some more storage done. I know storage has been slow the last decade or so. So not a lot of it's been built, and that can kind of help smooth some of that out. But that's a big one. The other thing is looking at the economy and what's going on there. How does that roll through to some of the other stuff like, steel and some of these other products that we look at? And if you look at how long the curve's been inverted, the yield curve, typically when it goes this long, there's a pretty dramatic event at some point, whether that be a large stock market drop, a large, job loss recession. And so those are really hard to predict. I think everybody was probably too bearish the last 2 years. I mean, like last year seems like the bearish year. Maybe I'm on Twitter too much. I've said this before, but it's like everything I read is like the collapse of the economy, but we kind of keep chugging along. I mean, jobs have softened a little bit. Inflation's still kind of going, but all those things matter to energy prices, steel prices, all these different markets that we follow. And so that's one that I'm always fascinated to talk about because no one really knows the answer. And it just always feels like with how good things have been going, it feels like there could be something on the horizon, which is probably a good reason to be hedged on crude oil because when something does happen, there can always be that dip.
Because, when you think about fiat currencies, when they collapse, they talk about the magic number being 120% of GDP,
right?
That no economy has sustained greater than that. And when the collapse happens quick. The Weimar Republic was having a pretty good time. Boom, all of a sudden they're wheelbarrows, and then boom, it's Hitler. You know, so it happens fast.
Yeah,
and that's what kind of scares me as an unemployed dude on a limited budget.
Well, and I think it happens quick, but it's also we're kind of like the best of the worst in terms of currencies. Look around the world.
Healthiest member of the Labor colony.
Right.
Yeah.
And so is it like the dollar milkshake theory where everybody comes into the dollar because all the other currencies are, if things get really bad, does the dollar shine and stand out on top? Do the gold bugs and the Bitcoin guys, do they have their day of celebration and a bunch of these alt assets, money goes to there? But we know energy is not going away. We know it's going to be a vital part of the economy, whether it's in a recession or a recovery. And I think that playing in this space, I've never been more bullish long-term that we're going to need it and it's going to be around. And I like working in a space with real assets that people use every single day. So we pay attention to that stuff, but it's not like the end all be all because ultimately, even if there's a big recession, people still got to get to work. They still got to go. They're still going to probably
got to be on.
Right. Lights got to be on.
Just things feel unstable to me. And I had to fill out my quarterly director survey being a member of a public company board. And I found myself being the most bearish I've ever been in filling out that survey for this most recent quarter, just with interest rates higher for longer. That's talked about, forever, just geopolitical instability, an election where who knows what's going to happen coming up. Everything just feels like quicksand right now. And I think that's tough. And we saw that, Q4, especially last year, on just people having a hard time getting to decisions and being confused. Now, as it relates to, our particular business, we've actually haven't seen this much activity in a long time. People making decisions, new management teams getting backed, the consolidation phase seems to have happened and non-core assets are being spun off and new teams are being funded. And, so from our business perspective, it feels like it's never been stronger before. So I find myself going back and forth and trying to, and I feel like that's everyone right now is where are the solid pieces of ground that we can stand on. And I just think that has a big risk to us where things just stall out here a bit in the near term.
No, you can really, because I used to hate when a management team would come in and say, Chuck, this time it's different. I'd always be like, it's never different. It's cycle, blah, blah, blah. But this time just feels different with this election. I don't think we've ever had these two bad choices, as well as I don't think we've ever been this divided. I remember kind of Carter and Reagan, and I remember Bush and Clinton and stuff, but I don't feel like we were this divided. And one of the things I did, because I moderated a panel with James Carville and Mary Madeline last week, that was so cool. I started off our prep call with, "Hey Mary, leave James, run off with me. I've had a crush on you my whole life." And she said, "See, James, I'm still hot." And anyway, it's great. But one of the things that we were talking about in there that I said is, I went back and actually looked at all the major legislative achievements of the presidents all the way back to Reagan. And if you look at them, every one of the presidents, and I just looked at the Senate, but I'm sure the House is the same way, about 2/3 of the votes for the legislative achievement would come from the president's party, but 1/3 would come from the opposition party. So you'd have stuff 70-30, right, 65-35, and that was all of them. it was really under Obama that literally you had less than 10% Republicans voting on all of his major achievements. Obamacare, 0 Republican votes. And it just felt like that changed. Mm-hmm. And we've been fighting since. So
yeah, and I think that's the frustration. At least I know a lot of business leaders watch this or listen to this podcast. This idea that you just need to have one more yes than no is fascinating to me. As someone that, has the privilege to lead people and build a vision and hopefully take them to new places, and be a part of that. Like, that's just not how it should be. Like, we need to be having, to your point, massive majorities to move any organization forward. And that the fact that we've devolved to that place from a political standpoint is just, it's fascinating to me that people have sort of lost the view of what leadership really looks like.
Yeah. The only bipartisan thing is spending more money than we make. Yeah. I mean, that's kind of it. I think that's probably bullish hard assets like oil and gas. I mean, you're going to need it. Is that inflation, ultimately it's going to roll through. We see it in service costs. We see it in cost to drill a well. And so, to the extent that break evens are higher, we need higher prices. I mean, I just think that in a bout of inflation like we've been in historically, oil and gas has done well during those times. So we'll see if that continues. But man, it just seems like the only thing they can agree on is just spending more money and making things more expensive.
Well, and Chuck, you're always good for a hot take. I'm curious on your point of view on what's happening on college campuses today, because it's something that I'm getting increasingly passionate about.
So this is interesting. I did some research for this, for talking with James and Mary. If you go poll 18 to 24-year-olds, so in effect a proxy for college students, Palestinian Israeli issues are like number 16 or 17. You've had 8% of college students say that they've participated in one of the demonstrations. So it's getting a lot of attention and people are talking about it. But actually, if you ask college kids what they care about, I can't buy a house when I graduate. I can't find a job. My car payment's going to be higher than I thought. So what's going to be an interesting dynamic is young people may vote more Republican than they ever have because they feel disenfranchised. They're losing the American dream. They don't have time to be idealistic because of, bread and butter type issues. And what's going to be weird is the other side of that, 65 years and older, if you're old and you've paid off your house, you actually got a pretty good life. If you think about
Interest rates are up.
You're getting 5 to 6% on your cash sitting in your checking account. Your house is appreciated so much in value. Generally not a bad time to be alive. So you might see more Democrats or more 65-year-olds voting Democrat this time. So I think the campus protests are sort of a whole lot of nothing.
Well, it's easy. It makes a lot of division. I mean, you see, like you said, they put so much focus on it. Half the time, I think it's like that's the goal, is to put the focus on the division stuff to just distract people from all the actual issues. It's like, let's put this like thing in the news. It's going to make everybody upset. And then that way they're just like scrolling on their phone, commenting on Facebook or whatever, instead of like focusing on the real issues. But
I mean, we could do this for a whole day. But if you really think about it, back when you had 3, maybe 4 news outlets, the 3 major networks, and maybe PBS. By the way, one of the funniest energy jokes, y'all remember McNeil Lehrer, the PBS show? You're too young, yeah. You don't remember it. But they were boring, drab newsmen on PBS, and David Letterman used to say, we can solve the energy crisis. We can just harness the sexual tension between McNeil and Lehrer. But no, when you had 4 media outlets, ad dollars were based on popularity. And so popularity pushed you more towards the center because you needed more viewers. And now that we have literally thousands of outlets, ad dollars chase intensity. So if my podcast gets 500 downloads, who cares on the numbers? But if those 500 people love me and will sign drilling contracts based on what I say, then I'm going to have a lot of ad dollars. And unfortunately, when you need intensity, you stir the pot.
Right.
To your point of let's go get the protest on there, and
brings eyeballs.
Yeah. Brings intense eyeballs.
Yeah.
Inflames engagement.
Right.
Exactly.
That's the thing that I've struggled with media. I don't know how you felt with it. You've been doing it for a while now, but like what I would notice is that if I put out some thoughtful thing about gas prices or storage or whatever, something that I did a lot of research for, it's like 3 likes. If I just make a joke about birds getting killed by a windmill, it's like 1,000 likes, you know? So you're like, okay, I see how this works. It's like, you know, and then you like make the kind of shit post thing, and then you get a bunch of people that are just there for that. They're there for the memes or whatever. And you're like, is that even a valuable audience? It's just a weird, like the incentives are so not good for, I don't know. So I've kind of basically have moved away from really caring as much about engagement and more just talking about things that I'm interested in, talking to the people I'm interested in, making relationships, because the legacy media game is just so, it's just that you want to get that enraged engagement, and I'm just not, can't live like that.
And this has kind of gone weird because now we've got Clyde GPT out there.
Right.
And we're training a language model on all the content we're creating. So you've moved from a world where I want to have Ken Hirsch on because I'll get a lot of people listening to this, to we've got a lot of people on Clyde asking this question. We have a big white space there. So I need a subject matter expert to come on here and talk about it so we can start training the model on things. And so actually talking about real stuff like we've been doing today, I think you're going to see more out of the podcast than Chuck Yates telling 13-year-old poopy jokes or something.
Yeah.
No.
Like that.
I'll tune in for those too, but I think you've done a great job with this, man. I mean, like, I think you bringing people together, you've got a wide variety of guests. I appreciate that. I like to tune in for the energy stuff, but then also you have somebody else.
I love your stuff too.
Have someone random on that's good. So
yeah, it's been great.
Yeah.
And you know, Bryan, I hate to warn you, but sequels always suck. We're making a sequel. This is your second time.
It's Max's problem.
Yeah.
If that's true. You know, just going back to wrap up that college campus thing, I agree with that. I think the issue is, I mean, it's an important issue, but I think it's being taken to different levels for lots of different, for many reasons. The thing that's been shocking, that I've been most disappointed in, is the students who are not involved in it. And, you know, just in thinking as a leader, and not that we hire that many people, but the kinds of people that we would want to hire that match our culture statement and just the way we do things, it's very important to me. And the fact that they're not standing up at certain universities and getting frustrated with being blocked from access to their classes, or having their graduations canceled or moved, or, you know, the bad publicity that's coming along with it, or, you know, you name the things. Those are the folks that I'm most concerned about. I know where the administrations are. They're in a tough spot. They don't want to make the tough calls. The professors are going to lean left. I mean, that's no surprise to anybody. And they're going to try to support the students. But like, I'm all for people, you know, assembling, protesting, et cetera. But when they start to trample on other people's rights, like, we've now moved beyond what we're trying to protect. And I want to know what the students are thinking about that are part of that on campus, because those are the people that we're going to hire, that are going to be future leaders, and folks not standing up against what is wrong. And that is trampling on the rights of other individuals sitting right next to them. That's the part that's really, that's bugging me a bit. Sorry, we've taken a wild left turn on this.
I'm glad you brought it up. I think it's interesting. It's actually been surprising to me that there has been a little bit of defense of what I will call America by some groups that have, you know, taken down the flag, put back up the U.S. flag and stuff.
Right.
Probably more engagement than I thought I would see on that, because I do understand. I heard this from a friend of one of my children. Just they kind of said, man, I just want to keep my head down. I don't want to get canceled by anyone.
Yeah.
I don't, you know, I want to get my degree and all. It's kind of sad we've gotten to that point too, where you can't get out and say, hey guys, you really know what you're saying here. So.
The cancel culture thing is real. People are afraid of that. I mean, people are afraid of being at some counter protest, and then all of a sudden they're on the news, and then someone's, you know, calling them names, and their pictures everywhere. I mean, it's like, on social media, when you have something go viral, it's kind of cool. It's kind of scary too. You're like, oh, I'm glad this is like a good thing, that I don't care about going viral, that I wanted to go viral, because something goes viral the wrong way and you could be, have a target on your back. I think it's more people that either have a platform or have the ability or confidence to have the platform should speak up, I think. And to Brian's point, I'm not against one side having their protests or saying there are other things, but it is concerning when people are scared to even speak up for the stuff that they believe in. And I think that's the cancel culture thing. People just don't want to get in a position where they could be targeted and then the mob is pointing at them type of deal.
No, that's right. I mean, I don't know if you've listened to Howard Stern recently, but Howard Stern, I mean, literally the most fined person in FCC history now could be press secretary for the current administration. And you just kind of wonder what happened to Howard Stern. I mean, is he worried about being canceled? Did he just have a change of heart? I mean, we can all grow old and have a change of heart. But
it's a cool time that we live in that anybody can have a voice or get themselves out there. And anybody that has, especially if you're into something that's very niche, whether that be something that's a hot topic political thing or whether it's just something like you like crocheting, whatever, pick the most niche random hobby. You could start a YouTube channel. You could start a podcast. And you can reach all the people that are into that weird little niche thing that you're into. And I think the younger generation, I've been really impressed with some of the content creators and people that I've seen. And then even people that have reached out to me, like these guys that help edit the podcast. They're just like in India, entrepreneurial, young guy. It's like, hey, I'll edit your stuff. I'll do a better job and charge less than what this other person's doing. So like, I feel like we live in a time where there's never been more opportunity to, if you want to have a voice or if you're passionate about a certain topic, get out there and just do it, make content. We can record something right here and hundreds or thousands of people could listen to it. And so the younger generation seems to get it. I'm like kind of, and the internet wasn't even really around when I was in high school, barely it was around. So I'm kind of like just on that first like cusp of it and I feel left behind. But right now is an incredible time for folks that if you want to have a message or if you want to create content, you should do it.
You can literally change your life from outbounds, because I don't know about you, but I made a lot of cold calls early in my career and way more effective today to be a thought leader, create your content, and take inbounds.
For sure.
So,
I don't know.
It's good to do.
Well, you dudes were cool to come on.
Yeah,
Congrats
glad to do it.
on the merger.
Yeah,
That's
thanks.
cool.
It's been fun.
Hopefully y'all are still talking in a year and I'll have you back.
Honestly, I would say it's been as best. I told Brian this and I'm not just saying it. It's gone as good as I could have possibly hoped it could go.
Yeah.
It's been good.
Yeah, it's worth saying. We mentioned it earlier, but one of the things we did, and look, you can't do this in every deal, but Max allowed us to do it. And it was the best thing I've ever done, where we literally 2 months before the deal closed, we might have had a term sheet at least drafted at that point, but we got our executive teams together in Oklahoma City and got on the whiteboard and started talking about what was possible. What could this company look like, post this, to get buy-in. Neither of us wanted to close if we didn't think we could do something unique, and that's not always possible because
like
sometimes there's animosity.
2 full days of 8 hours sitting in a room drawn on the whiteboard, and a lot of great energy came from that. And it's a great story about an off-market deal that we weren't like shopping the company. They wanted to do something but didn't have to. We kind of thought that could be cool, but we didn't have to. And then just to see something organic, M&A, small business acquisition type of thing, it was a cool process to live through and something that I think is harder to pull off than a lot of people. I mean, my wife was just like, this isn't, she's like, hey, how many deals? You're always talking about some deal. Cause like I've done the private equity thing in the past. I've done a lot of, she's always like, whatever this deal is, you get so worked up and then things like never close. Right. It's never been like selling the
Thanks,
company,
sweetie.
But it's like other deals, it's like you go deal hunting and, there's a low probability no matter what it is. And especially when it's something like this, that it's kind of an organic thing that happens. So
I used to always tell management teams that because they'd want to see a term sheet. And I go, look, I may be talking my own book here, so take it with a grain of salt, but man, I don't want to go get margaritas with somebody, sit around all night. I'd want to show you the crappiest deal I did. And one, would you have funded that? Two, if we did that together, are you going to shoot me?
Yeah.
And go through all that. Cause I always said at the end of the day, commercial terms, there's a market out there. You knew what your company was worth. You knew what was too much to pay. You also knew what was too little to offer. And we can always argue about it. But for the most part, commercial terms are commercial terms. So
right. Yeah, it's all the other stuff. And then the life change for us. I mean, being entrepreneurial and then going to a bigger company, which still feels very much entrepreneurial with what we're doing. So there's just a lot of things like the stars kind of aligned where it worked out.
Yeah. And we had our board meeting a couple of weeks ago, and you go through the board approvals, and here's the thesis, and here's all the reasons we want to do it. We actually shared all those materials with Max and the team at Ancova, and had them come in and give the report out. Hey, here's what we wrote down. Here's what we told the board. They didn't know what we had said to them. You guys talk about what's actually happened. And it turned into a really, really fun conversation where they facilitated that whole conversation at the board meeting. And, you don't see that all the time. I mean, we typically would be talking about, hey, here's the 4 things that have gone well. Here's the 6 things we're not going so well. And here's 3 other things we're watching. And this was literally everything we said was going to happen. And that's a credit to Max and Mark, because, we focus so much on the cultural aspects, so much on what we wanted this to be, what we knew it could be, and spent a lot of time, thanks to them, focused on the people. Yeah. And that was, they, I don't know if they're assets. To us, they're just people, and they're a part of our team. And it was very important to get that right. And that was big credit to Max and Mark for spending so much time there.
What's been cool is like the reception of the tech, and it's getting better now with all the work that Aegis is doing to like incorporate it into their platform. But I kept being like, it's not going to be a problem necessarily selling it. It's going to be like a problem that we're going to have a bunch of people that want it, and we got to get it implemented. And that's going to be the hard part, is that like taking on a lot more volume. And then to come out of some of the meetings, like a few of the ones recently where the light bulb went on for them, it feels pretty good, because I'm like, I wasn't just BSing you. Like I told you people were going to like this. Like we had seen it already a little bit, but we hadn't marketed it as much. It was still really new. And so to see that play out, and then to see the work that we've been doing to make it better, it just feels like incredible runway and opportunity there. And it feels good. Like, hey, this wasn't all just a sales pitch. Like, yes, everything's a sales pitch, but some of the stuff that, we were really touting is coming true, I think. So that's exciting to see, versus the other way around, when people are like, this stuff sucks. Yeah. And we told them it was the greatest thing, or
you
whatever.
Paid what?
Yeah. So I think it's panning out.
Well, cool, dudes. Appreciate you guys coming on.
Yeah, thanks for having us,
Chuck.